Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I don't know about you, but I'm pretty sure it's like 1,000% humidity when I was outside earlier today. But I guess we are fully in those dog days of summer and nothing says that like high heat and humidity.
You could just send a little rain along with that high heat and humidity. I'd sure take it today.
You know, I really have been hoping that this would spur some storms, and it has a little bit in our part of the country. We haven't seen it for a couple of days though, and it looks like we're in store for another interesting round of boomers this afternoon and into the weekend.
So I've decided around Columbia, Missouri, just like NASCAR today has a little red arrow that you have to line up on each side, the storms now go north and south of mid-Missouri, unfortunately.
There's like a little dome over your part of the country, it kind of feels like, where it sends it north and south.
Yes. So we could sure use something to break that.
I will do what I can. I will send my Thor hammer to break the dome if I could. All right, we're going to talk probably a little weather and a little drought implication in the long term. We're going to talk some monthly trade data, some jobs, look ahead to next week's report. But to kick things off, let's recap what happened this week in the markets.
Yeah, so this is another holiday week, although it seems like the 4th of July was a long time ago. But when we look at markets this week, live fed cattle were almost 30 cents higher this week. Those feeder cattle markets really untested. You know, a lot of those markets were closed because of the July 4th holiday. On the future side, the August live cattle futures contract was basically unchanged on the week. The August feeder cattle contract lost about $2.15 this week. The choice box beef price was also lower, down about $7.25. However, it's still almost $55 above where it was relative to a year ago. So strength on that side. On the hog side of the equation, cash barrels and gilts stronger again this week, up nearly $4. And the August lean hog futures contract was also up nearly $2.70. Pork cutout value, good news here, up almost $6.60 on the week. That only now, Megan, puts it about $5.75 below where it was a year ago. And just so we know, hams and bellies certainly helped the pork cutout value this week.
It definitely seems like it's a situation of strong demand and concerns, probably about some tighter numbers on the hog side of things moving forward.
For sure. And, you know, it's interesting relative to where you and I would have been a month ago talking about this market. And today, it's been nice to see some recovery. We're not where we'd probably like to be, but thank goodness we've moved back up some on the hog side.
As we take a look at slaughter numbers, kind of an interesting a midweek holiday feels like not only like we're having like 3 Mondays during the week, but it has a weird impact on what happens for the week in terms of total slaughter, and that slow day on Monday, close Tuesday, and then picking back up on Wednesday.
So I have a sure bet here of I'll bet you $1 that next week when we see the numbers are going to be higher for cattle and hogs.
You think?
When we look at what USDA is telling us for the week ending July 8th, the run of 539,000 head of cattle. So that is down 108,000 from where we were a week ago, down 49,000 from where we were a year ago. On the hog side, also a lighter run, 1.954 million head. That's down 378,000 head from a week ago and down 18,000 head from a year ago.
Scott, as we take a look at those year over year, how are we stacking up in terms of cattle and hog slaughter?
Yeah, so we're now down 3.6% on cattle with this lighter run this week, and we're up 1.1% now with the lighter run on hogs. But I haven't really changed that overall movement of cattle and hogs as we've gone through 2023.
The big report this week, I say there's one big report. I mean, jobs report was pretty kind of wild too, and we'll talk about that in a second. But monthly trade data, it's kind of interesting to see pork be the star after so much talk about beef in the last couple of years?
Yeah, so it's a change, right, from where we were in 2022. You start on the beef side. The May beef exports 267.1 million pounds that left the United States. That's just down marginally relative to April, but relative to year ago levels, down much harder. We almost pushed 320 million pounds out in May of 2022. Year to date, down 10.8% in terms of quantity of beef exports. We moved 1.3 billion pounds of beef in the first 5 months of this year, and maybe equally interesting or not such great news when you look at year-to-date value, down 21.1% in those first 5 months. So certainly not good news there. When you look at where we've been going with beef, Japan down, South Korea down, Mexico's the only one that has been up year to date. You combine everybody else together, they're also down. However, on the flip side, 618.1 million pounds of pork was exported in May of this year. That is the highest pork export number since May of 2021 on a monthly basis. So it's a nice little run there. When you look at year to date, we're 9.6% higher on what's been 2.87 billion pounds of pork that's left U.S. this year. And on a value basis, we're 11% higher on the pork side. When you look across who's been taking that pork, Mexico's first. You can see some growth into that China, Hong Kong, Taiwan as well. And then it's a lot of everybody else. So when you take out Mexico, China, Hong Kong, Taiwan, Japan, when you look at everybody else, they're up 124 million pounds year to date in exports. So some good news or better news there on the pork side of the equation.
What a good story to tell, though, about diversifying markets and how important that plays and the overall demand for U.S. pork beef as well, too. I mean, we work hard to make sure those products are going to other countries. But I think after the whole, you think about the trade relationships with China, we saw it with soybeans, pork a little bit on that same side. Being able to find other markets and to fill our basket, fill everybody else's baskets is a really great testament to the product that we raise and the work that's being done to diversify those markets.
For sure. And, this sometimes gets beyond the whole disease kick. You look back at China, 2020, 2021 with ASF there, that certainly helped us. And we probably all knew that wasn't going to stay with us longer term if China recovered from some of their ASF issues, and we could argue about that, I suppose, today. But it certainly just highlights that, again, that diversification, both from trade relations as well as things like exchange rate, disease events, etc. There's no downside to diversification. Now, I don't want to downplay Mexico's been really important. Hams to Mexico has probably been the bright spot for a longer period of time. And so we don't want to lose those traditional markets, but we want to keep working on new ones as well.
Can you talk a little bit about, we talk about hams to Mexico, why that relationship is so important? I think maybe sometimes people may not know why that market and how that market works for hams.
Yeah, so we've been shipping a lot of ham south to Mexico here for many months. I think some of those end up in further processing. Perhaps labor is a little bit cheaper for that further processing of hams that's going on in Mexico. But when you look year to date, Mexico up about 72 million pounds in terms of the amount of exports we're able to send them. And I'll say beyond that, exchange rates here, I think, have been helpful to that as well. So it's made our product a little less expensive going into Mexico. But without that movement of product to Mexico, the ham prices we've seen and the effect on the pork cutout value would be very, very different. So thus the positive, and keeps growing. I've always been a little worried we'd at some point run out of steam there, but thus far it's been very good.
All right, let's talk jobs. June report, a little interesting. And especially thinking about the revisions that came into play as well.
Yeah, for sure. So 209,000 jobs were added in June, according to the BLS data released today. That was the smallest growth in 3 years, according to the data that's out there. On top of that, revisions downward in both April and May numbers. Um, as I recall, April was down significantly so I think its original estimate is about 294,000 jobs added, revised down to 217,000. So adding jobs, we're not saying we aren't adding jobs, but we've been watching these jobs numbers closely, trying to understand whether we've slowed the economy or not. I will say, when you look at the numbers as well, some of the not fully employed numbers would suggest that some folks are getting hours cut now. So if you want the economy to slow, maybe you can find your nugget out of the report today. When you look at hourly wages, they are up 4.4%. That was actually a little above pre-report estimate, but all in all, perhaps we're continuing to see a little bit of slowdown in economic growth.
I would have to assume, I mean, we talk about that weird relationship between inflation and the jobs report, but if you're a producer of beef and pork, you have to find a little ray of sunshine that those wages have gone up as well, because that's going to help continue, right, to help consumers buy product or have dollars to buy those products.
That's absolutely correct. I mean, if you don't have money in your pocket, you're not going to consume beef or pork, either one. So there is a fine line here that I think it's difficult to walk. So yes, perhaps if the economy grows too fast and we're trying to slow down inflation, we don't want to be creating too many jobs too quickly. But at the same time, we want consumers with more money in their pockets. And I think the report certainly kind of walks that fine line between more money for consumers and not so fast that inflation might accelerate. We'll have to wait and see whether that plays out in the months ahead as well.
As we wrap up today, obviously weather, we teased in, joked a little bit about the weather going on throughout the country. It remains a serious concern. Drought remains a challenge. We have supply and demand numbers coming out next week. As we take all of that into consideration, what are some things that you're watching weather-wise still, in thinking ahead to those supply and demand numbers?
Yeah, I guess for me, Megan, right now we've had enough dry weather in cattle country that we're not going to get that pasture back until fall, probably at this point. So hay is going to get very expensive. I think you've got folks feeding hay that normally wouldn't even be thinking about it this time of year. How long can they hang on before further liquidation tries to happen? I keep hearing anecdotally we're running cow numbers in these cell barns at very high levels, which to me then kind of points to, I'm curious what happens in the July cattle report we're going to get here in a couple of weeks. We might push a little more production here in the short run than we otherwise would have if we're going to keep liquidating. But longer term, we dig ourselves a deeper hole. And that opens the whole can of worms of then, when the prices get so high that consumers start to shift. I'm glad we have very high cattle prices, but I also don't want to turn consumers away from the product and then have trouble bringing them back when at some point in time we try to grow the herd again.
I feel like you and I talk a lot about fine lines that have to be towed to make everything work smoothly.
Yeah, so I go, the rubber band is not as elastic as it used to be. Um, and yeah, you're going to make me be an economist here, and I've said this a few times. Of to me, these markets are becoming just less responsive, and I mean both supply and demand becoming less responsive. And when I think about farm level demand for things like cattle or hogs, all the value added post that farm gate, it just means I think, less responsive as consumers to that farm price. And so when I say fine line, I mean it just doesn't take very much of a move in shorter supplies or bigger supplies to go from very high prices to very low prices. Um, I sometimes say I think we've masked the volatility by saying, "Oh, we've had the next black swan event." And I'm not saying we haven't had some really big events. I'm not saying that, but I think there's more to the story than just these one-off things that are happening. And I'll keep saying out loud, the structure of all these ag commodities are becoming less responsive. Folks should pay attention to marketing strategies with added volatility.
Risk management.
There's a reason why we're saying risk management. All right, by the way, I will say to LRP, I'm glad a lot of folks, I see a lot more use of LRP. I'm not claiming that you and I necessarily had a lot to do with that. However, I think it is the beginning of cattlemen in particular to begin to see that downside price protection is not a bad strategy. I just hope everyone will remember that I want them to pay the premium and not receive an indemnity payment. That although might be hard to swallow at times, means cattle prices went higher.
Also out next week, retail prices and consumer sentiment. So we'll get to talk both sides of that coin next week in terms of the producer, the supply demand side, and the consumer demand, and how that's all playing out.
So maybe we could put another dollar on, I bet we have record retail beef prices next month or next week in our report.
I think I've lost like every bet with you I've ever taken in sports. I don't know if I want to be in a gambling game with you.
Well, I might be stacking the odds in my favor a little bit there.
A little bit. All right, Scott, it's great to see you. Thank you again for spending your time with us this afternoon. We appreciate all of the information. We will talk to you next Friday.
Thanks, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments if you have them. And for a rundown of what happens every day in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.